Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're discoing. This is a gold brief. Please, before I start, like, share, subscribe if you want this content to be uploaded regularly. All right. This is a TLT, the ETF for 20-year plus. And today we had a beautiful bullish price action where we had price expansion of this much with very high volume, and also a kiss formation in a MACD, which is really important for a healthy and it's also a bullish disco combo for both a healthy gold rally and a healthy bonds rally. Good deal. This is the EURUSD. Also, you need a bullish disco combo for a healthy gold rally in the EURUSD. And today we were very close to have a bearish MACD, yet it's extremely close, and we're not fully in a bullish disco combo, yet the RSI is over 50. So it is extremely probable that we might go further up from here. And also it is possible for this thing to be bearish. That's why I have two scenarios for gold in this video. So this is the EURUSD in the daily time frame. Let's look at it in the weekly time frame. It's very close to have a full-on bullish disco combo, yet it's not official yet, but it's getting there. So we really are in no man's land in the weekly time frame for the euro. This is the USDJPY, the ETF for dollar bull, and also this is giving me a mixed signal as well. You have an RSI over 50, you have a bullish MACD so far, and a bullish stochastic. That's why it's extremely hard to have a determined view for gold today. It's extremely hard. No one knows. I promise you, no one in the world knows. But we might have a better view next week. So EURUSD in the weekly time frame, the bullish disco combo is still intact. So this is bad for gold, good for the dollar so far. So I talked about the EURUSD in the daily weekly. I talked about TLT. I talked about the EURUSD. So let me talk about the USDJPY. And we broke out of this round and saucer, bottom and saucer, also the cup and handle. And we're still in breakout mode, and we hit the first target at 127 Fibonacci extension, and it's probable that we have profit taken, but it's possible we go further up like we did here, and we went up, and we did here, and we went up. So definitely in the yen, in the USDJPY, definitely we're in breakout mode. That's why it is extremely risky to hold gold now. As I stated for some of my friends, that GDX might go up because of this bad boy, and also because we reached a 127 and 162 Fibonacci extension of this breakdown area, which give us a very probable place where the buyers gather, and that's what they did. And we went all the way up to the breakdown zone, and we stopped there. So this could be all she wrote, or maybe this rally at Lakes. So it is okay to have bought here and sold here. It's not okay to hold here because we don't know the future, and the chart has two two scenarios. The bullish scenario for gold is we retrace from here, and the bearish scenario for gold is we keep going up. Especially all of the indicators are very, very bullish way, especially the stochastic. And usually when the stochastic is over 80 and it stays over 80, the double buyers always step in. So this bearish crossover doesn't mean anything that much. It happened here in May 24th, and we see what happened after that. So this guarantees double buying, but we don't know where it's going to stop. Okay? So scenario number one, we retraced, GDX go up. For the scenario number two, we go all the way to 161 Fibonacci extension at 149.43, and at that place I'll be really, really, really comfortable taking risk and buying and hold for GDX. So I talked about this one for GDX. Now let me tell you my negative views about GDX so far. Is usually whenever we have a tradable bottom, we have a very noticeable volume expansion at the bounce. We had it here in July 26th. We had it here in September 28th. We had it here in November 4th. And it's very obvious what happened after that. Also, we had it here in this rally in 1st of March. We had this beautiful volume expansion, and wow, we had it in March 13th. Oh my God, have mercy. We had a beautiful, more than 30% rally. Oh golly, amazing. And now we're still in breakdown mode. Okay, and the volume is anemic. This does not mean this rally does not have legs. It means you should have sold here and wait for confirmation later. Okay, let me talk about this bullish scenario, which I really believe in for sure. This is, as you see, we are definitely in forming this bullish wedge where the price target might go all the way up to 36 from here, but it's not confirmed yet. We need to break out, and we need this bullish discount combo to confirm itself on Monday. Okay, so we not only have that, we have a bullish divergence between the price action and the indicators. Not only that, we have the RSI missed the 30 levels in multiple important time frames. One of them is the daily. Okay, and you can see that in the daily. You can see that in the 4 hours. The RSI missed it. Okay, see that? You can see that even in the 2 hours. See? It's amazing. It really is amazing. This is definitely amazing. So not because we have this anemic volume, that means this rally would fail. We have to prepare ourselves psychologically for anything and everything. Okay? So this is it for GDX at this level. Now let me look at the average duration of a correction. Usually, some corrections since 2020, some correction would last for 4 months for a sizable bounce. Some of them with 1 month, 3 months, and the average is about 1.5 months. And we did that. So we met the average here at this correction as far as the duration is concerned. Okay, let's look at price destruction. Usually since 2020, sorry, the average price destruction is 21%, and we hit that yesterday. We did 23%. So we met the average price destruction and the average duration. Now we're just waiting for the confirmation of this beautiful bullish scenario I talked about earlier. Let me show you another thing with it when it comes to a GLD GTX ratio too. Okay, let's look for the real one. Come on, man. Come on now. All right. Okay. So also, so this is GLD GTX ratio. So in order for a good gold rally, this ratio should go down, and the more red it is, the more valid the rally would be. Okay, so we're forming now a bearish wedge with a bearish divergence, where there are assignments, the 70 mirror image of what's going on with GTX, okay, and a bearish disco combo. Yet we did not break down, same as the GTX. So not because of this ugly anemic volume we give up on GTX. No, it's extremely probable. It's possible. I don't know if it's gonna be okay or not. I'm gonna wait for the confirmation, and on Monday maybe. So a confirmation with this bullish wedge, and also the breakdown of the GLD GTX ratio. Please, before I leave, like if you like, share, subscribe, and do remember, disco is forever.